Hello and welcome to my update on the mini budget under our new PM Liz Truss. And well, what an exciting mini budget it's been. Our new Chancellor of the Exchequer, Kwasi Kwarteng, he spoke for only 25 minutes today, but effectively turned the recent history of British tax policy on its head. The Chancellor says the past approach of governments increasing taxes to a 70-year high will not be continued. Instead, via tax cuts, a trend rate of growth of 2.5% per year is the new government objective. This, according to him, will turn the vicious cycle of stagnation into a virtuous cycle of growth. It all sounds very good, but how will that affect us all as investors in London property, you may well ask? Well, great news is the Chancellor included immediate benefits for the housing market. Firstly, no more stamp duty on the first £250,000 of a property purchase. That's double the previous allowance of £125,000. Next, first-time buyers will only pay stamp on the homes over £425,000, which is a big jump on the previous £300,000 threshold. And this applies to properties up to £625,000, which is increased from the previous level of £500,000. And these changes take effect today. It effectively means if you buy a property in London as an investor or homeowner, there's an immediate saving of £2,500. Sadly, he didn't review the additional property stamp duty charges. Other good news for investors, though, are the bonus cap for city bankers has been scrapped. This will for sure make bankers clamour to be based in London, thereby increasing demand for property in central London. The creation of 40 investment zones across England, with exact detail to be confirmed later, but it will have substantial incentives for investors such as low or no stamp duty on commercial or job-generating developments. An acceleration in the release of government-owned land to be sold for private development. Increased supply will mean more opportunities. There'll be long-term reform of the planning system, which will be outlined in the coming weeks, but a new bill will reverse planning restrictions with the aim of streamlining processes, which is all good news for the housing market. There's also been a raft of new tax incentives announced to create a much more private sector friendly economy with the emphasis on growth. Specific measures include scrapping the 2023 proposed corporation tax rise, leaving the rate at 19%, making the UK super tax efficient for companies, as will be the lowest of the G20 economies. And from April 2023, the basic rate of income tax will be cut from 20p to 19p, giving people more money in their pockets to spend. At the same time, they were proposing to scrap the higher 45p income tax rate completely to attract global talent and incentivise employment. This will lead to higher earners wanting to be based in the UK and London, who will all need homes. Incentives for those out of work to return to the labour market or risk reduced benefits. Minimum service levels by law to reduce strike action in key industries. Pension fund investments will be unlocked to allow investment into targeted growth projects. Existing enterprise investment schemes and share option plans will be enlarged. The government's Office of Tax Simplification will be wound down, with the process devolved to all departments. A guarantee that the Bank of England financial independence will be maintained. VAT-free shopping for overseas investors will return. Planned duty rate increases for alcohol will be cancelled. National insurance increases proposed for 2023 cancelled as well, as announced earlier this week, without reducing spend on the NHS and social care services. The Chancellor also repeated pledges for substantial financial help to keep household and business energy bills below market levels for between 6 months and 2 years, sector dependent. Overall, this was hardly a mini budget. It's a full-scale reversal from the direction taken by both Conservative and Labour governments over the last 20 years. I think it marks a new era for the UK, and in turn, with all the positive news surrounding housing, could help lead to good, strong, sustained growth in house prices over the next 1 to 5 year period. With more reforms to processes, especially planning, to be revealed in the coming weeks, in my opinion, this may well be the start of a revolution in the British economy. Thanks very much for listening.